You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. We got a couple of interviews for you today with two co-founders of companies that have been winning a lot of awards lately, and they both really fit nicely into the whole concept of people helping people, that old credit union credo, particularly from the financial inclusion standpoint, and dealing with both younger members and ones that probably need a hand but are long-term very attractive customers. Srinath Raghunathan of Starlight and Nathan Pinto of Credit Mountain. We'll be getting to those in just a second. Want to tell you, as always, that you can find out more about the Best Innovation Group by checking out our website, big-fintech.com. Plenty for you to take a look at there regarding the Innovation Club, the Five product, and all kinds of other services around artificial intelligence, etc., that the Best Innovation Group has to offer. The big news this last week, and I can't possibly go without at least talking about it a little bit, is the CFPB's final rule, which has finally been issued regarding personal data rights, data sharing, open banking, etc. Came out on Tuesday, and it's 594 pages. I won't even pretend that I've read the whole thing. I think if anybody tells you that they've really absorbed it all at this point, I'd probably be a little bit suspicious. And I certainly can't do it justice in the little bit of time we have here. I will be writing a blog, which again does not intend to do more than kind of lay out a couple of the key points. And I will tell you my number one takeaway here for credit unions is it's probably okay to exhale a sigh of relief a little bit, but don't get too comfortable, because they have pushed out the deadlines in terms of compliance. They've also basically exempted all but 500 credit unions from the technical requirements that come from this rule around data sharing. I think that is a bit of a misnomer, because I think if you just decide to rest on your laurels, you're going to have your lunch eaten by some folks who are actually complying with it. I think it creates kind of a de facto standard. And again, we'll talk a little bit about that in the blog, and I'll post a link to that. And I think that the CFPB in their 594 pages, there's a couple of reasons it's that long. I think they did just enough so they can make it clear that they listened to the comments that came in. They mentioned in the document that they received 11,120 comments, which is probably just a function of our internet age and how easy it is to just kind of cut and paste something. But they also said that they received 290 unique detailed letters. That's still a very large number, and I've seen many of those, and people put a lot of thought into it, and they did a good job of actually kind of making sure that they responded to them, including even making comment about the fact that they've exempted about 90% of credit unions from these rules. I think they may have even quoted a bigger number, which I'm not sure how they get, because what I see is 500 credit unions that will still directly be required to comply. They have pushed out the deadlines. The first chunk of credit unions, or any institution with 10 billion or more of assets, and there are 21 such credit unions in the country, they have to comply by April of 2027. Then there's three other tiers that kind of come up on an annual basis. There's the final batch of 193 credit unions at anything over 850 million have to be compliant by April of 2030. Sounds like a long time, and it kind of is, but I guarantee you it's going to get here faster than you think. There are still a ton of unresolved points and issues I see in here. The one thing that they came right out and said, that despite some complaints from industry, was there's no basis for any cost recovery on the effort it takes. Effectively, we're talking about an unfunded mandate, which is somewhat ironic at the same time that they're pushing back on fees in other areas. The other pieces that they kind of still punted the ball on, which I find strange, is data privacy in terms of exactly how that will work and who holds the bag if something goes wrong. Fraud liability, actually, it's standards on how to deal with that. They said it would be inappropriate to set a standard for that right now. I'm not really sure how that's inappropriate. So I'm sure we're going to hear more about that, and specifically around blocking requests from third parties that banks believe are nefarious. They say they must have a legal reason for doing that, which, again, I'm not exactly sure what that means. There's already been one lawsuit filed about this. The Bank Policy Institute has filed against this one. I was surprised this came out quite when it did. You may remember a couple weeks ago, we spoke with Tracy Davies, the CEO of Money 2020. Rohit Chopra is going to be on their main stage on, well, by the time you listen to this, he will already have been on the main stage on Sunday night, the 27th. I thought he was going to announce it there, but I guess, you put it out about 4 or 5 days before. It came out, I believe, on Tuesday, the 22nd, which gives people a chance to absorb it. But curious to see if he really expands more on it, or at least I'm guessing he'll be somewhat more guarded in his words that he has on stage, but whether he goes off script or just even what he chooses to emphasize in the 594-page ruling, to me will be news in itself. And we'll certainly be tracking that and following up to see where that goes. So more to come there. And as I say, please do check out the website. You can find it at big-fintech.com on the blog, or we'll post a link in the show notes to a little bit more detail that I've put together on that. With no further ado, let's jump in first with my interview with a company called Starlight and their co-founder, Sri Raghunathan. Here with Srinath Raghunathan, the co-founder of Starlight, a company that I got a chance to know a little bit better at the TruStage Ventures Summit out in Madison, Wisconsin a couple of weeks ago. First chance to really get a sense. You're still a very young company, but I got a deeper dive into what you're doing. Sri, thanks for taking the time to talk.
Absolutely excited to chat, and thanks for inviting me.
I thought you really laid it out nicely with kind of the human aspect of what kind of brought you to looking at solving this pain point in the marketplace. Can you share the story you shared on stage at TruStage?
Absolutely, and thanks for being there. And it was great to connect with you and several amazing credit union leaders who were at the TruStage FinTech Summit. And TruStage was one of our early investors and believers in us. And so tell you a little bit about our story. And it's slightly different for me and my co-founder, but both have a very consistent running theme, which is that I'd spent about 10 years at Google building new products for them, primarily in the measurement space. And my co-founder, Kat, had spent time at LinkedIn building solutions originally for white-collar workers. And both of us had left our jobs almost with the clarity that we wanted to build something that's more impact-oriented and has technology and service of community. And we'd come to a fellowship called Blue Ridge Labs, which is the office I'm talking to you from here in New York. And they're a co-working space and a fellowship that encourages technologists to build community-centered solutions to alleviate poverty. And one of the things they're very focused on is saying that, a whiteboard and 2 smart people is not the answer. It's actually going and talking to people who are impacted and seeing what their challenges are and seeing how you can serve them. And in that process, of about 6 months, a year and a half ago, my co-founder Academy spent time talking to low-income households about their challenges, about their lived experiences, about how we could serve them. And in parallel, we also saw that there is a lot of stressors in terms of inflation, budgets, and things people are struggling with. On the other side, we saw that there was this benefit system which had programs that federal, state, and local governments had set up, but they were getting underutilized because of a mixture of reasons, including complexity, lack of awareness, and also just people feeling like government's really hard. And if you don't count the DMV and the IRS, people don't like talking to government. So we saw this opportunity to actually make and disambiguate the complexity of government benefits, improve the financial health of households in need. And through a series of steps, which I think you heard a little bit about at the TruStage Summit, we started with financial coaches who do one-on-one coaching and then expanded to seeing that credit unions are a great fit for finding community members in need and serving them through improving their financial health. And it's a win-win-win between us, our partners, the credit union, and also the households we serve.
Now, you mentioned financial coaching, but some of this is an automated solution because it's to some extent kind of a portal or a marketplace to make people aware of the benefits that may be available. I think you quoted some numbers about how much is kind of out there that in many cases goes unclaimed because people just aren't aware either that it exists or how to get access to those funds.
Yeah, it's close to $140 billion annually that goes unused, and it could help 50 million households around the US. And the number of people who get all the benefits they're eligible for and they've been paying taxes for tens of years that they're not able to get today is close to 95%. So 5% of people probably get all the benefits they're qualified for. And 95% of people do not get all the benefits that are available. And that is the bridge to get them from financial stress to out of stress into actually thriving and becoming full participants in the economy.
So the first place that I saw Starlight was actually almost exactly a year ago. You won the competition at Money 2020, something they call America's Got Access. At the time, as I understand, you were, I guess, only incorporated for about 6 months, did not have any live customers. The competition is intended to be for very early stage companies. But can you say a bit about like how things have evolved from kind of the vision you had at that point to where you're at today?
Absolutely. And it was a great opportunity. And Commerce Venture, the Money 2020, gave us a chance to showcase our thesis on the world, which we've then gone out and kind of worked on and been executing against for the last year, which was that we saw that between three facts, right? One is underutilization of benefits that we just talked about. The second being that there are already existing relationships that low income households have with the financial institutions, the credit unions, the banks that they bank with, who are serving them, but their current products and services do not serve their critical needs when they're living paycheck to paycheck. And then the third piece was that if we use them as both a partner, trusted delivery provider, and also someone who benefits from the unlocked money, they are great conduits for us to reach households in need. That was our thesis that we came into Commerce Ventures and the Money 2020 Summit with. And America's Got Access is very much saying if we can unblock this access, we have this sort of secondary and tertiary impact where you give a low income household an extra $100 to $200 per month to balance their budget. They become better parts of the economy. They can participate in the workforce. They can actually put food on the table for their families. And that makes them more financially stable. And guess what? The banks are happy to have them, right? Because the credit unions and the banks we're talking about will see improved retention, better repayments on loans, better engagement. And in the long term, these are early college graduates. These are people emerging from the army who are entering civilian life. This is someone facing an employment shock or a medical shock that temporarily needs assistance, but they're going to come back and get a car loan, a home loan, a relationship with the credit union in the long term. And so what's happened since then is we've seen over six credit unions that we're live with, several more in the hopper, who've seen the value of what Starlight can do for their members and how it's an opportunity to not just think about serving the community through foundations or charitable donations, but through their products and services.
I mean, it ties directly, I mean, perfectly, it kind of dovetails with the whole people helping people mantra. I mean, it seems, and like you say, it
100%.
also creates, people who are likely your members already struggling and, makes them better members and better potential members down the road too, in terms of their wherewithal. You mentioned you're live with 6 credit unions at this point. I'm curious, as you've kind of moved more into that partnership model, working and delivering the service through the credit unions, any other kind of learnings? Have you tweaked the offering to some extent based on their feedback or experience through that channel?
Oh, 100%. I think, we're thankful for very honest and meaningful feedback from our early partners because they see the potential of the product and we understand probably the benefits landscape better than a lot of our partners, but they understand their members better than we do. And so we've tweaked several aspects of our product based on the insights we gained from our early partners, and we continue to iterate on this. A couple of major ones are one is that we're looking top down from like $140 billion and where the unused programs are and how we can guide members to find them. Our partners know locally what's available. An example, like a credit union in Texas was telling us about a down payment assistance program that is
Oh,
available to put people in homes. And it's highly underutilized because it's complex to find and complex to apply for. And so we're like, let's add that. And so we're working on adding that right now to surface that in Texas and eventually in other geographies wherever there's down payment assistance program. The other piece that's very interesting is they taught us a lot about how their staff and their teams are already doing proactive work in the community. And so we're almost mirroring the behavior of an awesome frontline staff member in our product, in our messaging, in our communication, so that they can reinforce this with even in branch, like saying, hey, you're struggling. We can't help you, but here, scan this QR code and you can go into an experience with Starlight that can guide you through how we can serve this member in their time of need. And so we've had to evolve our product in a really good way to adapt to the behavior of how credit unions interact with their members, both digitally and in person.
That's really, and that's interesting. You've come a long way, obviously, in a very short period of time. And I'm guessing, I know you've mentioned that there's more in the pipeline, but with 6 live clients, I'm guessing job one right now is to just kind of scale and bring this more broadly to market. But I'm assuming you've got some other thoughts about how you might try to expand the approach as well.
Yeah, I think when I think about expansion, I think about sort of three aspects, right? I think one is we're already live in like 5 states, probably going to be in like seven by the end of the year, and we want to be in all 50 states. And so we follow our partners in making sure we cover their members wherever they are. And so we're excited to do that. It's pretty quick for us to launch new states, but it's important to make sure we match and deliver a high quality experience for their membership. That's one dimension of expansion, which is like benefits coverage, accuracy, and messaging.
That's a good point. I hadn't thought about that. I mean, the majority of maybe not the majority, but a good chunk of these benefits are state specific. So if before you can move into a different state, you've got to really, kind of upgrade the database.
I mean, the best part about that is that we have to thank a lot of the advances in Gen AI, which has actually guided a lot of our ability to track and monitor all these programs and surface the right information to the right member.
Great point.
So my joking way to describe it, it's Gen AI, but not in a chatbot that everyone thinks is the only way to deliver AI, because we're doing this in the background to help guide the content and the material and the instructions that we can surface for our members and guide them through the process.
Makes sense.
And then the other piece to your question is, we want to also expand in how smoothly we can make the experience magical for members. Right now, we already have a white label product, and every credit union chooses how to brand it, position it. We want to encourage our partners to think of this as an extension of their product strategy. We have a checking account, we have a savings account, we have a high yield savings, we might have a credit builder account, and now we have essentially embedded Starlight, right? And so some of them might call it a bridge up, some of them might call it welfare benefits, some of them might call it, this is our benefits navigator. And this is one more product in your toolkit that serves the right member at the right time. And so we're investing a lot in making those experiences feel and look more seamless, so the member doesn't feel like they're actually taken away from the credit union. It's almost just a continuing relationship that they have.
If I get a vote, I'm going with Benefits Navigator. I like that one. Well, this is great, Sri. I'm sure there's people who want to find out more. Best way to do that?
Absolutely. Firstly, get-starlight.com is our webpage. We're super excited to connect with everyone. My email is just my first name at get-starlight.com, and I'd love to chat with anyone who's interested. And then we're pretty active on LinkedIn and in our socials, sharing our progress, our learnings, and almost like how we're building with the industry so that we can continue with almost serving the credit union mission. We're a public benefit corporation. We also have a dual mission where we want to serve the community and serve the public, in addition to being a sustainable company. And so I'm excited to bring more of our community along with us on this journey.
Just to make sure I heard that correctly, you're a B Corp? That's the way you're set up?
We're a public benefit corporation, which is even a bit more direct because we're Delaware incorporated with the dual mission.
Oh, wow. Okay. I got to look at the specifics of the difference between those two. That's interesting. And you said it's get-starlight.com. That's the URL.
Yeah, that's it. Exactly.
Got it.
We'll soon get a cooler domain, but not yet.
And I'm sure you'll be on the credit union circuit as well with some of the regional events and conferences. And I believe you'll be at GAC come March as well, correct?
Absolutely. We'll be at GAC. We'll be at the LSCU conference next year. And so we'll be at a lot of the primary conferences that are coming up because it's a big deal for us to continue to deepen our relationships with a lot of the credit unions around the US.
Great. Srinath Raghunathan, the co-founder, along with I forget, Catherine, it goes by Kat. Is your other?
Yeah, that's right.
Of Starlight. Really enjoyed talking to you and be watching what's coming next. Excited for you.
Thanks so much, Glenn. Really appreciate you.
So in addition to last year's Money 2020 award of the America's Got Access competition, Starlight also just won this summer at the League of Southeastern Credit Unions in my backyard. They had a Shark Tank-like competition, and they came in first. So that's when Sri mentioned he'll be there in person at their annual conference coming up this spring. So obviously getting a fair bit of attention here for what I think is a pretty darn cool solution. Continuing on that same thread, Nathan Pinto, again, and coming directly off of, he joined us right after he had returned from the California Nevada Credit Union League REACH conference, where they also took home some hardware. I'll let him talk to you about that himself. Here's my conversation with Nathan. I'm here with Nathan Pinto, the co-founder of Credit Mountain, who's on a bit of a winning streak. You just got back from the Reach conference, where I understand you won Best of Show there, and you won Best of Show at Finovate. I guess it's about 6 weeks ago now too. Congratulations, Nathan.
Yeah, thank you. We were honored to win, and this one was especially meaningful considering it was votes from credit union employees themselves. So that means a lot to us.
And that's the California Nevada League, right? That puts on the Reach conference.
Exactly.
Okay. So, I shouldn't say reconnected, but I kind of saw the latest from Credit Mountain at Finovate, as I mentioned. We first spoke 2 years ago when you pitched at Venture Tech. So obviously, the company's evolved since then. But I love the phrase that you use about helping credit unions decline with dignity in terms of working with loan applications. Can you kind of say, I take it that's kind of the shorthand version of your mission. Can you say a bit more about that?
Yeah, as an entrepreneur who's had a roller coaster of credit, I've been declined for a lot of loans in the past. And I think there's nothing worse than all you receive is what feels like a boilerplate letter, and you're kind of felt like you're just, shoved to the side as an unwanted member, unwanted customer. And so the whole idea is here, how do you actually deliver to somebody a better decline experience that's going to help them not only feel educated and empowered about the decline, but also aware of what they need to do and equip them to get to a yes.
So I think, and that makes great sense because, again, as I saw you on stage when you're talking about this, these are, this may be a certain situation in the here and now, but these are solid potential customers at some point down the road. So, you don't want to get a situation where you're alienating them and they're never going to come back. These are the people you're probably going to want to be talking to at some point in the future again, right?
Well, I mean, beyond that, I think it's, the statistics on the likelihood of somebody doing business with you after being declined are really kind of what I think captures the attention of a lot of credit union folks. And the statistic that a member of the Cornerstone League shared when we were attending sort of this board meeting where we got feedback was they saw 88% of the people they declined never apply for a loan with them again. Now, that's obviously a really high percentage, and I think it's got some, shock value to it. After studying it, it's safe to say it's around 70%. So, if you're declining a couple thousand people a month over the course of a year, you're just burning bridges with tens of thousands of folks. And you do that for, a decade. And next thing you know, in your field of membership, probably a good fraction of people are not interested in ever applying with you again, especially when there's a growing number of options and, no shortage of places that will lend to folks once they are creditworthy.
You mentioned the Cornerstone League, and I noticed, I think it's on your website that I saw this, that you actually had worked early on, I guess kind of proof of concept, we'd call it, with the Cornerstone Foundation. I guess, is that something of a little bit of your origin story? Can you get into that a bit?
Yeah, I would go even one step further. I mean, I think we wouldn't exist without the Cornerstone Foundation. And so we are, eternally grateful to Courtney Moran and Ryan Dold for seeing the opportunity to build a solution for us and marry us together with 5 credit unions that had the willingness and desire to be design partners and solve it alongside us. And later on, they even invested in us. And so, in many ways, I don't think Credit Mountain would exist without them. And certainly, I don't think we would be where we are without them either.
I think you mentioned something about, the original, and you're a serial entrepreneur, if I'm not mistaken, correct? This is not your first rodeo?
It's not my first rodeo, no, and I think an addict for life. I expect it not to be my last either.
Well, I mean, I think you mentioned that, again, kind of looking for a pain point to solve. I think you mentioned that there was something with the Apple Card was one of the ways you got at this.
That was the original inspiration. We previously were trying to take on payday loans, and we built the first ever debit card that could turn into a credit card upon emergencies. So people in our previous product were actually able to leverage their savings for a line of credit. And so we built it, we launched it, but we lost our lending ability during COVID. And that's a whole separate story for another day. But in that process, when evaluating what our choices were, we had gotten enough insight from consumers to realize that we should probably pivot and we should probably focus on what they really wanted, which was help improving their actual credit score and help getting mainstream credit, less so avoiding payday loans. And so At that point in time, we were poking around and thinking of different ideas, and then we stumbled upon what Goldman and Apple were doing with a program called Path to Apple Card. And this was a program where if you were declined for the Apple Card, but you happened to be a near miss, instead of just declining you, they would invite you for a 4-month creditworthiness improvement program. And during that program, if you met all the criteria and followed the steps and so on, you'd be pre-approved for the Apple Card.
Interesting. I was not aware of that. That's really interesting. So basically you took that proposition to the credit union space.
We took that proposition to the credit union space, and I think, at the end of the day, what we wound up learning was that trying to convert declined borrowers is really hard.
Yeah.
Trying to take somebody from a decline to a yes is a challenge, and that's why you don't really see Goldman and Apple. You don't really see that program replicated across from others. But what we also learned is that while that happens, and it does in fact happen where you do get folks to go from a no to a yes, what it's really about is you don't want to burn the bridge with declined borrowers, right?
Mhm.
You don't want to cause the decline to be the end of a potential relationship. And so, the analogy that I use is there's two types of breakups, right? There's one type of breakup where, the people in the middle of a restaurant, someone's getting dumped, they get up, they scream, I never want to see you again. And maybe they throw their water at the person and storm out the room.
Hopefully
But then
water, not wine. Yeah, exactly.
yeah. And there's another type of breakup where the person's still obviously sad, but they thank the other person for being open and honest and communicating with them and giving quality feedback, and they can remain friends and stay in touch with one another. And so I think at the end of the day, our solution as it's evolved is less focused on how do we get these people back together, but rather how do we help these people have a better decline experience, understand more, and be on a path that the door is still open, and if and when it's time to explore again, they are open to doing business with those individuals. And beyond it, the other side, the credit union, has a type of data that lets them know the right time to reach out as well, and I think that's a fundamental game changer.
Great point. And it's funny. This is just last night. I was at a panel discussion where that exact same breakup analogy came up. So
Really?
yeah. So it's
How
funny.
was it used there?
It's making the circuit. Yeah, that's. But yours was. I think yours was a lot more pleasant. That one had the kids were already kind of hooked into the back seat, and the mom was leaving out of the driveway. So I like yours better.
And that's related to what? Not the same decline solution, is
No,
it?
no, no. It's
Okay.
totally related to customer experience. About
Okay.
if you've got a customer that is about to leave, it was the same basic premise, but not around lending specifically. It was more around, yeah, you don't want to necessarily burn that bridge. Same basic idea. There's always a chance they may come back, but at a very minimum, let's not have them go away and they're going to be bad mouthing you for the rest of the time. They can leave them at least, in a way where your customer might say, okay, well, it's a company I might want to do business with again at some point in the future. I mean, this was like a Netflix kind of a example or something like that.
Got it. Makes sense.
But I think if I'm not mistaken, when I looked at the website, I think did I see 14 credit unions that you show as clients? I don't know if that's the full count, but obviously you're growing. You started, I guess, in Texas because you mentioned Cornerstone, and now you've actually expanded more broadly.
Yeah, we're nationwide. We're now at 22 credit unions. We're probably will be at close to 30 by the end of the year, just given those that are in final contract review stage. Yeah, we've been really fortunate. I mean, I think we've more than doubled this year, and the good part too is I feel like we finally, after many rounds of iteration, have landed on a product that consistently adds value to credit unions, and I think the best part too is actually saves them money as well.
Yeah, I mean, when you talk about iteration, I mean, everybody's got learning by doing. Any kind of real aha moments that popped up that caused kind of significant pivots you can share?
I would say a key one is it's really difficult to to convert declined borrowers. I think that's what we learned within the first year. And then, the next thing we learned was roughly if you close your eyes and open it 12 months later, 20% of people's are going to move up a paper grade within the 12 months. And so how do we find out who those people are? How do we nurture those relationships? That's a large part, the name of the game. We've learned how important relationship building is for credit unions. So how do we empower loan officers to know when the people they declined are now ready. And so it's less of a tool that they're going to use to manage a pipeline or a CRM, but versus how does the tool manage that nurturing and then notify loan officers when they're ready. So, the long list of learnings, obviously, it started with large iterations going from trying to convert declined borrowers to just improving the decline experience as the primary focus, with the conversions being the icing and cherry on the cake. And then, smaller iterations from a client portal that could be used by loan officers to a client portal that just delivers leads when they're ready to loan officers.
So if people want to find out more, and I got a feeling several people will, I know I'm going to be seeing you. This will be airing, I think, when we're both at Money 2020. So if people happen to be listening in real time when this drops, they might still be able to track you down in Las Vegas. But any other opportunities on the circuit, as it were, or just the website? What's the best way to get in touch?
Yeah, you can book a demo directly with me from our website at creditmountain.co. I will be at Money 2020 and would love to meet with any credit union folks that are interested in sitting down and chatting. And other than that, I think, the best way is just see a demo yourself. Really, I think we've, over the last few years, really invested a lot of time and energy to build a cool product. And I think once a credit union can see sort of, okay, they can envision what the non-adverse action letter in the mail looks like, I think in many ways the product sells itself.
Well, based on your best of show nods that you just got at the Reach conference from a bunch of credit union employees, and then also at Finovate, where there was a decent number of credit union employees, but also other folks more broadly across the financial services spectrum, I think that speaks volumes. Nathan Pinto, thanks so much for taking the time, co-founder of Credit Mountain. See you in Vegas.
Thanks, Glenn. Safe travels.
So as we said, you may still get a chance, if you're listening to this right as it comes out, to catch Nathan and I on site at Money 2020. I'll be there all the way through Thursday the 30th. I'm not sure if Nathan's going to be past Tuesday there, but more likely, I think you can probably check in with both of us virtually. You can do that the way that Nathan mentioned, and I'll post his email account as well. And as he said, he's more than happy to set up demos with you individually. That's the beauty of a QSO and working at kind of a retail level with these founders who are more than happy to show you the ropes. As you know, you can always find me at the Best Innovation Group website, big-fintech.com. You can find me via my own firm, 154 Advisors. Track me down on LinkedIn. I still post occasionally on X, but I think I'm a little more active these days on LinkedIn. And check in again next week. We will be back on Tuesday. At that point, what is that? The 5th, I believe, of November. Oh my gosh, that's election day, isn't it? We'll be here. Be a nice diversion potentially. And I should have some great content already, kind of my thoughts and reflections, and hopefully some really good interviews from my time out in Las Vegas at Money 2020. I am not going to try to corral Rohit Chopra and talk to him personally, but I will certainly be reporting on what he has to say on stage around this whole data sharing thing. If it's incredibly impactful and urgent, I may put out another blog before next week, but at a minimum, we'll be talking about it here. As I always say, you can find out more about the Best Innovation Group and our grand poobah, John Best. He is at JB FinTech. He's also John Best, of course, on LinkedIn. You find the Best Innovation Group at Big FinTech. You can find us all there. You can always find new content pretty much every Tuesday here on the Bigcast, wherever you get your podcast. You can go directly to the website, big-fintech.com. You can go to Amazon. You can go to Spotify. You can go to Apple. I don't know where else you can go. You can go to your neighbor's backyard. You probably find it there too. I'm not really certain. But as I say, we're kind of still in the heat of the conference season. We've got Venture Tech coming up a few weeks after Money 2020. The Innovation Club is meeting. And again, if you are familiar with the Innovation Club, hopefully I'll see a few of you out there. And if you're not familiar, check out the website. Again, it's a drop-down tab at big-fintech.com. Not sure if you can still make it out there this time around, but we'd love to talk to you about getting involved in that group. A lot of really interesting stuff going on there. Until then, thanks as always for listening, and we'll see you soon.
Check back each week for the latest from the Bigcast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.